Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Sorry if my voice sounds a little off today. I have a scratchy throat, so I have a cough drop right now. I'm just trying to make it, tolerable. But for today, Tuesday, I almost said Monday. For Tuesday, we are up to $56,150. Of course, that is going to fluctuate. But today we're going to go over the overall portfolio value, of course, the value by the metrics, the buying power, the individual holdings, and to see if there are any deals within the portfolio. And then we're going to talk about our watch list and what prices we'd buy those stocks at. So jumping in for today, we are around $56,130. And we're pretty much break even today, down about $300, a 0.66% loss. Now that 1 week mark, we're up 15, almost 1600 with about 3% gain. 1 month mark, we're down 150 with a 0.3% loss. So we pretty much gained what we lost for today in the week. For the 3 month mark, we're up $6,300, a 12.7% return. Year to date, we are up $6,300 with around a 12.7% return. So we are right around the same spot for the 3 month for the year to date. Then the 1 year mark, we're up $11,500 with a near 26% return. And then all time since April 9th of 2018, when I started, it says I started with 26,000. That is not true. You can see videos on the channel where I had like $10,000 in there, but we are up $29,651.74, a 111% return. Buying power sitting at $22.01 because I did go ahead and transfer some cash over and I bought both a share of Google and a share of Apple. So I'm trying to stay consistent with that. Every single month I'm buying a share of Apple. And I'm excited to build that into one of the bigger positions in the portfolio. So jumping into the individual holdings, Realty Income just did a dividend increase not too long ago, sitting at $57.11, down a little bit today, but probably not enough for us to purchase it. We have 5 shares, around $286 of market value. Average cost is right around $52 per share. 0.5% of the portfolio is in Realty Income. Today we're down $3, down 1%. Total, we are up $26.83 with about a 10.4% return. So guys, a great return here in the short term. This is one of those that I do want to build up to be one of the bigger positions, but I don't want it to be a core position. So my goal for this company is to essentially replace my income with just this stock. The overall portfolio goal is to do that as well, but I want to put enough money into this company to alone replace my income, which would be a lot of money. So, and I understand that. But I don't want to overpay for the company either. So as of right now, I'm just going to sit, let it keep growing, use the dividends. It's like $3, I think, a couple dollars, to reinvest wherever I can. So any little bit of dividend income helps. It's a slow and steady journey, but $3 today, if you keep adding shares and letting it compound and grow over time, eventually it will build into something that can replace your job. So I know this isn't a high growth company, but it does have a very important purpose, which is to replace my income. Then we got Altria sitting a little below $60, 320 shares, around $19K worth of market value. It's one of the bigger positions in the portfolio. Around $47 is my average cost, with around 33% of the portfolio, almost 34% in Altria. Today we're down $200. Total, we're up. We're still in the green, around $3,850, so around a 25% return here. Dividend coming in at the end of the month of $326, which will then buy me a share of Apple, and maybe with a little bit of extra cash, be able to buy me another share of Google for this month too. For April, I'm super excited. Next up, we got Coca-Cola at $71.60. We got 15 shares, a little over $1,000 in market value. Average cost is $60.54. Around 2% of the portfolio is in Coca-Cola. Today we're down 45 cents. Total up $165 with an 18% return. $7.60 dividend at the very beginning of this upcoming month. So guys, this is one of my favorite personal favorite companies. It's very close to my heart. I want to own it. I want to own shares of it so I can own a piece of that business. So this is one of those that is not a high growth company, but it's been around for over 100 years. I buy the product every single time I go to the grocery store, and I want a piece of that pie, right? The economics of the business are solid. I understand how the business works. I understand the brand, and I'm very loyal to that brand. So this is one of those, like, if you buy Nike shoes every week or every month, if a new pair of Jordans drops or Steph Curry drops a shoe, etc., you should probably own the company that they're dropping those shoes through, which I believe would be either Jordan or Under Armour, something like that. So if you are very brand loyal, buy a company's product anyway, and you're fueling that company, you essentially are paying yourself through the dividends that you acquire as you buy that product. So now, forever, as long as Coca-Cola pays me a dividend, I can go buy nearly a pack of Coca-Cola every single quarter. So, and eventually that'll be enough to have a Coca-Cola habit and buy it, use that cash flow to buy that forever. So this is one of those that's going to be in the top 5, and I'm excited to own more. But I just don't want to add at these higher prices. An 18% return on Coca-Cola is pretty ridiculous. I'm waiting for it to come back down to earth. Then we got Apple at $222.57. 12 shares. I just added another one. Market value is $2,600. Average cost is around $218 per share. Around 5% of the portfolio is in Apple. That could get as high as 50%. Honestly, I would not be mad. Today, we're up $3. Total up nearly $50 with a near 2% return. Guys, still a very good buy for me in this range. I really dropped the ball here with Apple. I knew to own it in 2018, and I was stupid and was like, oh no, I want to buy other companies. It was dumb. So I made the same mistake here that I made with Visa. I have no problem sharing that it was a mistake, and I'm trying to learn from it by buying more. So this will be the single biggest position unless Visa takes it over, which either way, whether it's Apple or Visa, I'll be happy with. So this is one of those that I want to hold for decades, and I want to keep on adding. Next up, we got AbbVie, my best performer, down a little bit today. 95 shares, almost $20,000 of market value. Average cost is $95.19. 35% of the portfolio is in AbbVie. Today, we are down around $59. Total up 119% with a $10,000 gain. So this is by far the best performing stock. It is fulfilling its goal. I'm not going to add at these higher prices because my average cost is $95 per share, so I'm not going to double my cost basis to add more. But what I will do is I'll use the dividends from AbbVie, which I believe is about $150, to then use some extra cash and purchase a share of Google. So my idea now is my Altria will buy me a share of Apple, and I should have some cash left over, probably about $100 left over from that sale. So with that $100, I'll leave it in the account, and then when AbbVie pays me that $150, it'll be $250, and I'll be able to buy a share of Google with about $90 left. Now with that $90, I could go ahead and keep it going and buy a share of either Coke or back into Altria, where the original dividend came from, and just keep letting it roll. So technically, Altria is buying Apple and then fueling a buy with the help of AbbVie to purchase Google fully, and then with the leftover from both of those dividends, I will also have Visa and Google paying me that next month, and with those dividends, I can go ahead and buy a share of Altria again to make the dividend grow even more, or I can go ahead and start adding more to Coca-Cola. So it's just going to keep on snowballing, guys. Keep in mind, I know a $56,000 portfolio isn't the biggest on YouTube, right? It's not a small amount of money either. I'm kind of in that, like, I get numb to it because I see it every day, but I understand it's a lot of money, right? That's a brand new car. That's a down payment on a house. That's a lot of capital for, a 20-something-year-old that has never had more than like $10,000 in his bank account, right? That's a lot of money. So my goal is to just keep letting it snowball, right? And so AbbVie, with the help of Altria and Coca-Cola, is going to buy Google, and then it'll grow. Visa will help with the dividend, and then I will use all that extra cash flow for the third set of months to buy either Coca-Cola and or Microsoft, maybe Realty Income, and then it just keeps rolling. So AbbVie's clearly the best dividend growth company I have in the portfolio, and I think it will grow the dividend for decades to come, and eventually, with that dividend growth, I think it could be able to buy a share of Google on its own. Then it's just extra money going into that next set of months. Then, of course, we've got Visa, which is down kind of big. I mean, $5 is kind of a big drop in a day, but it's not $50. Only a 1.5%, so it's not a huge drop. It looks big just because of the chart, but It's actually up compared to a week ago, and it's down from a month ago. So it could be a good buying opportunity. We have 35 shares, 12K worth of market value. So this is the third largest position in the portfolio. Average cost is around $3.50 per share. About 22% of the portfolio is in Visa, which I'm very happy about. I want it to be more. Today we're down $200. Total, we're down $100 with about a 0.7% loss total. So guys, this is one of those that I want to keep building. It is a good buying opportunity here. The problem is $300 is a lot of money. So I could either keep using Altria to buy the Apple shares, or I could use that plus a little bit of extra cash to buy Visa. So just depending on where the stock prices are. As of right now, Apple makes more sense to buy. But if, say, Apple gets to $400, like $400 a share, and I decide it's overvalued, I don't want to touch it, then hopefully at that point Visa will be at a better price. And if not, that's why I have alternate investments. Like Apple could get to a point where Visa better buy, or Realty Income could just pay me every single month. So we have alternatives for that specific reason. Just because Visa is a good deal today does not mean it's going to be a good deal tomorrow or in a week from now. So that's why it's important to find multiple high quality paying dividend companies, because Visa is not always going to be a deal, right? Google's not always going to be a deal. So you need to take advantage while you can and be patient enough as an investor to sit on the sidelines and wait for another opportunity. Then we got Google at around 100, right at 150, 159, 7 shares, $1,100 of market value. Average cost is $188. Around 2% of the portfolio is in Google. Today we're up $19. Total we're down $202 with about a 15% loss. So guys, Google's still a great buy. Even though I think it's a better buy right now, I probably, if you had said you have to buy a company right now at current prices, I would probably buy Google, because I feel like it's a way better cost on average opportunity. But when it comes down to it, Apple is still my main goal. But I would not be surprised if, since I already bought for this month, technically that was I bought in March and in April. I bought with both checks. So technically, if I buy a share of Alphabet again, it's not that big of a deal. So I'm already ahead of my goal for 20 shares in Apple, given that we're at 12. And keep in mind, Altria is going to be buying another 3 shares. So I need, 5. So I should be fine to hit the goal of 20. And sneak in a couple Alphabet buys here or there. Having like 10 to 12 shares, 10 to 15 shares of Alphabet by the end of the year would be great. And then, of course, with our watch list, we have Costco, and about $9.50 would be fine by me. I'd be happy to buy it there. And then Berkshire, I'm kind of having a love-hate relationship with. So the 52-week low to high, it says 400 to 530. So as of right now, it's like $6 off of the high. Do I want to buy it there? No, but does the business make sense to be valued that? I'm not sure. I haven't I haven't done my calculations on Berkshire in a little while. So I need to look at their insurance float a little bit closer, figure out, why the business is trading at a higher price, which I'm sure a lot of it has to do with the income, with the float, and with the fact that people see Berkshire Hathaway as a safe haven. So when the market is going up, Berkshire doesn't generally do as well as the S&P 500. When the markets are going down, when there's an election, when there's bad economic, uncertainty, something like that, Berkshire generally does well or beats the market, because Warren Buffett is seen as a safe haven. So if there's bad economic news, if there's bad economic outlook, and he goes on CNBC and says, "Oh, I have $384 billion in cash, I'm ready to buy." If you have an investor as legendary as Warren Buffett, ready to go on the offensive, people have been waiting for him to shoot an elephant for a long time. That's what he calls it when he loads it up and he buys an elephant. He buys something like Walgreens, or he buys something like CVS, something like a big publicly traded company, or he finally gets enough, or gets an opportunity like something like Clayton Homes or See's Candy. If he finds a business that he understands the economics, has enough cash flow to purchase, he will. And right now he has a lot of cash. Plus, keep in mind, he has that massive insurance float. He has actual dividends from companies, publicly traded companies he owns, and he has cash flow from his wholly owned subsidiary businesses that all flow into Berkshire. So he has a very good loop of income. And he's honestly, in my opinion, the best steward of money in the world. So he understands when and when not to be in the market. He understands how effective he can be with his cash. And he also doesn't just jump into any random opportunity. So many people probably would have put the money into, say, Google or something like that. He says he doesn't understand how to value Google, and that's fine. So he has $300+ billion in cash on the side. And you know what? If Apple drops, I bet he'd buy more Apple. He's selling it now because he thinks it's overvalued. But he is waiting for an opportunity and has been for decades. And when he jumps, it's going to be a big deal. So for Berkshire to be trading at a little bit of a premium when the overall market's uncertain, there's a lot of political stuff going on. There's tariffs going on. Everybody's worried about the economy. I'm not expecting Berkshire Hathaway to like jump to 600, but I am not surprised that the stock price is going up. And I want to be a part of that as well. So I mean, at this point, I owe myself, I think it's 7 shares now because I said I wanted to buy one a year. If I did that, I'd have like a almost $44,000 position in Berkshire. So I owe myself that. So this year, I will definitely be buying a share of Berkshire for Christmas. But as of right now, guys, I'm interested to kind of see what he says at the meeting because I'm going to that here in a month, I think, beginning of May. So a little under a month here. We're going to be going to the Berkshire Annual Hathaway meeting, and I will probably, I don't know if I'll do videos or not. I'm with my family, so it's hard to know if I'll be in the recording mood or not. But most of the time, I just kind of keep it to myself because I like to have those moments with my family. So we'll see. I have gotten a couple requests to like share a couple pictures and stuff, which I might do. Or film, just to kind of show how massive it is. We'll see. If you guys are interested in content like that, I wouldn't mind doing a little bit of a vlog episode just because it's a really special occasion, and I've done it for 4 years, and it's so cool to go see. So anyway, guys, with that being said, thank you so much for watching. Remember to hit the like button on the video. It does help. Hit the subscribe button on my channel, that Dividend Guy. It does help the channel grow. And the more people that see this, the more people might get inspired to invest and change their lives. You know, I started with nothing. You know, I didn't inherit a bunch of money. I didn't, nobody gave me anything, right? Most of the people in my life told me I was a fool for investing, told me I'd lose all my money. So this is 100% built on, for better or worse, my investing decisions, my grit, my hard work, and anybody can do this, guys. So I want to say thank you so much, and I'll see you tomorrow with another Robinhood portfolio update. Thanks, guys.